All right, and we are live. Wow, what a week last week. I mean, markets were up, the S&P more than 5%, Nasdaq more than 7%, and everything looked good because the trade deal with China seemed to be possible. And then on Friday, a bombshell from Moody's downgrading the US credit rating from AAA to AA1. And this is this morning rocking the markets. So we'll talk about it, what it means, and what to watch out for this week. And then, of course, as always, we'll talk about our current positions. And with that said, welcome to Coffee with Markus and Mark. And today is Monday, May 19th. And in this show, we're going to talk to you about what's happening in the markets and how we are trading it. All right, let's hop over. Mark, I mean, we got to talk about last week. Last week, it was just up, and away.
It was, Marcus. I mean, there's only one way to describe last week, and that is stocks were on fire, finishing at highs of the week. So sometimes, even if you have a strong rally during the week, there's a little bit of hesitancy going into the weekend. Do you want to be long? Maybe a little profit taking. Not the case last week. Finishing at highs, S&P, Dow, Nasdaq, everything finishing the week strong.
Yeah, and just like this, we're positive again for the year, and all of this tariff scare seemed to be behind us, even though nothing has really been resolved. Only one deal has been announced with the UK. Everything else seems to be just pending. No other deals, and traders are waiting for it.
And that is interesting because you're absolutely right. And I think that the big thing is that right now, investors believe it's not going to get much worse, right? They think that the firestorm is past, and sure, there might be some little hiccups along the way, but at least the markets are telling us it shouldn't get worse. Now, if it does, look out. But for now, people want to be back in equities.
Yeah. And just like this, we're also above the 200-day moving average again. So this is where we dipped below it and last Monday jumped above it and staying solidly above it. 50-day moving average already there, also well above this. And we will see. I mean, at this point, we know that we had the death cross where the 50-day moving average moved below the 200-day moving average right now, waiting for it to reverse the so-called golden cross. But I mean, right now markets are on fire and just a few percentage points away from making new all-time highs.
Yeah, you blink and all of a sudden we go from panic to record highs. Almost there.
Almost. And then on Friday, after the markets close, a bombshell from Moody's downgrading the United States credit rating from AAA to AA1. Gosh, Mark, I mean, on the one hand, this was shocking investors this morning because if you look at the E-mini S&P and the 5-minute chart, we kind of see that all of this started to happen Friday after the close when Moody's came out with the news. So as you said, we finished Friday right here on a high, highs of the week, and then boom, the slide. And overnight, at first, the slide continues because let's talk about it. What does it mean?
Sure. So I think that this was part of it was an excuse to sell off after such a strong week, but then also it was a an inverse reaction to what's going on with yield. So the 30-year bonds, the yields popped above 5%, just a huge move. If we look at where it's been to now where we're at, so you see that move in bonds. Marcus, I know that the 10-year yield there for a minute back above 4.5%, and when it crept up above 4.5% with Trump's initial, tariff attack that went out there, there were some concerns about what that meant for the U.S. economy potentially and where money was moving. And right now we're back there because of this downgrade.
Right. And so, yeah, let's look behind this a little bit. So, first of all, what does it mean? The US constantly has to refinance their debt because they're issuing 2-year notes, 10-year notes, 5-year notes, 30-year notes. So, right now, some of these notes are expiring and need to be refinanced. Now, if you think back, I mean, 2 years ago, 5 years ago, let's say 5 years ago, interest rates were super low. So now they're much, much higher. And so the debt is much higher and we need to refinance it. So this kind of means it can get only worse from there. I mean, it's not that like when you have a credit card and you carry a balance there and you say, well, they're jacking up interest rates, that you say, oh, you know what, I'm going to pay down the balance. Where's the money coming from? So, what does it mean when a rating agency downgrades the rating? It now means that basically the US bonds are worth less. They're moving lower. I mean, compared to like trading in your cell phone, right? And if you're going to the store and they look at it and say, well, this is no longer in mint condition, there's a few scratches on there, you get less money. And this is exactly what's happening. So US bonds are right now getting cheaper, driving the yield higher because there's an inverse relationship between the bond prices or the price of bonds and the yields. And this, of course, makes it more expensive for companies to borrow money, especially tech companies. And this is what we saw here this morning. If we just look at the pre market, we see bright red all across the board, mainly Tesla, Amazon, Google, Meta. So the Magnificent Seven, all down, even Broadcom. I mean, Broadcom, we should make them the Magnificent Eight. I mean, Broadcom has deserved it to be in this in this spot here, right? And this is what we see happening. So again, interest rates staying higher. So right now, exactly what Trump doesn't want because he knows that this is causing big problems with this enormous debt that the US has.
Yeah, so there are some reasons why the market dropped that can be explained and are logical. However, there really wasn't any new information that was shared here. So when Moody's downgraded the U.S. credit rating from AA1 to AAA, the there's no new news. In fact, they're now just in line with the other major agencies. And Marcus, do you remember when the S&P first dropped? It was the first time ever in U.S. history that where it was dropped since the credit agency back in 2011. Do you remember what happened?
No, I don't.
S&P was down 6.9%.
Hmm.
Huge drop, right? Because that was a shock. That was a first. That came just out of the blue. Fitch, they dropped the rating in 2023. So that's why today we're even clawing back those losses, trying to fill the gap because the first credit rating drop was huge. The one in 2023 not as bad, and right now it's kind of the markets are just shaking it all off because Moody's is now in line with all the other agencies.
Right. What just happened overnight or over the weekend is that it was brought to attention again. That,
Yeah.
oh, yeah, right. Because 2011 is a long time ago. 2023 is a long time ago. I mean, this is already 2 years ago. And this is where traders and investors are often like goldfish. I mean, they can just focus on one thing at a time for a little bit. And this is where this was almost forgotten. And then, shoot, yes, there was something. And this is where at first the shock this morning, but then also realizing, oh, wait, yeah, Moody's are kind of the last ones and following in line with what we already knew from the other two major rating agencies.
Yep.
All right. Well, in other news, just one more thing, and then we can take a look at our positions. Did you hear this morning? Warren Buffett said he will not take the stage at the next Berkshire Hathaway shareholder meeting.
I think that we're getting close to not having Buffett around.
I
He even
mean, it's
said he even said that he stepped down because he's feeling his age. I mean, gosh, if I could start feeling my age when I'm his age, that
right.
would be impressive.
How old is he again? Is it 94, 95?
Something like that.
I mean, definitely well in his 90s. And boy, is he sharp. I wish that I could be as sharp as
Yeah,
him when I'm in my 90s. I mean,
sure.
just kudos. And yes, big news already a couple of weeks ago when he said that he will step down next year. And then also this morning saying, I will no longer sit on the podium. I will sit in the audience. I will sit in the front row, but I will be watching it from the sidelines. Wow. Let's see what BRKA is doing this morning. So based on the news, slightly down, but I think this is with the overall market, not
Yeah.
based on the news. Uh, the reaction to the news was right here. It was let's see, when exactly did we have the earnings report? The earnings. This was on beginning of May. I think in beginning of May when there was the announcement. This when there was a drop. Alrighty. Well, let's see how we are doing with our positions. First up, WTF. My gosh, the WTF strategy has been doing really, really well over the past, what was it, a couple of weeks? I mean, at first we didn't have any trades. Then suddenly we had, around 6 or 8 trades that were popping up?
Yeah, and they all worked out nicely. Last week we closed a bunch, so we got out of uh what was it?
We got out of
MO.
ABT and a few others. Yeah, I mean, we
Yeah.
got out of them for almost all of them with a profit. One was a small loss. And then also
Yep.
today, as you can see, with last week's rally, no new signal, no open signals, but 4 exits. So we exited our 4 open positions, and all of them we exited with a profit. AEP worked out great. This is where
Yep.
the original entry was at 104.43, but then we had an add at 5% drop. So that's what we like to do. When it drops 5%, we like to add to the position. Because of this, we were able to exit this trade. So this worked out great with a profit.
Yeah, can't complain.
CCEP, super short trade. I mean, we entered it on Thursday and we exited it. No, Thursday or Friday, we entered it and then we exited it today. And we also, in addition to a nice profit here, we get a dividend because we were the shareholders on record on Friday when there was ex-dividend date. So another 90 cents per share being added to the profits here.
Yeah, can't complain there.
Yeah. CVS, what do you know? Doing exactly what we expected to do with the WTF strategy. First in an uptrend, a sudden unexpected move, and then a quick bounce back. That's what we're looking for when we say WTF, win the fear. Take quality stocks that are dipping. Well, that's supposed to say fear. You get the idea. And then sell them as they bounce back.
Yeah, textbook example of a WTF.
Finally, EXC, another utilities looking very similar. All of the charts are looking extremely similar here.
Yeah, it was nice to capitalize on those last couple of days.
Yeah. All right, hopping over to our wheel positions. And first up, CSIQ had a really good couple of weeks here as we are bringing it up. And we see that CSIQ moved all the way up from below 7 to around $12, 11.50, 75% move. Then this morning, opening lower with the overall market, but same as the overall market, coming back, trading close to 11 right now. I really like what I see here. We have left, as it seems, this range that we had between $7 and $9.50, and we are now back in a range between $9.50 and $12. I'll take it.
Yeah, I mean, this has been a tough one, but rebound like that and make these big moves and now trading in that upper range, looking good.
Yeah. HAL, Halliburton. Gosh, I am still trying to fly a rescue mission at the 20 level. Did it last week. Expired worthless. So right now my cost base is at 30.50. My break even at 27.17. Still planning to bring this down a little bit to go into this range so that as soon as we pop up here towards the 27, 28 level, we can start selling calls again. But I mean, also hanging in there right now, it seems that crude oil and Halliburton needs to both move higher.
That would be the goal here. I love your idea there for a rescue. Nice range, and it's tightening up. And I do think you have some fundamental reasons for crude oil to move higher over the next couple of weeks. But right now, it's just sit and wait.
Yeah. IWM, boy, we have had fun with IWM. This is just this is just amazing. So because this is where initially we got assigned at 217. Let's just bring it up here. So the initial assignment was right here at 217. Then we sold more puts, bringing down our cost basis to 199.75. That's where we had our cost basis, and we sold calls against half of our position at the 200 level, and the other half of the calls for you at 208, for me at 210. And then what happened on Friday?
Well, on Friday, there wasn't much meat on the bone for those 200 calls with a roll. So looked at it to see where we were at. I think we had maybe 40, 50 cents credit if we were to roll those 200s, which based on the buying power that we're tying up wasn't enough for me to get excited about staying with the 200 calls and keeping that going. So I had my half of my shares called away at 200. Markus, you did as well.
Yeah.
And we still have half of the position open with the 208s for me and the 210s.
Yeah. And I mean, this trade has been lots of fun. For me, it's more than $13,000 that I already earned on this trade in premium. And now might be able to participate in the stock moving higher here. So this is where we will see when we get called away. But I mean, this here could be easily for me a possible $20,000 trade. And I'm loving this.
Yeah, it's fun to tackle it in phases at different levels, and yeah, we'll see we'll see how long we could milk the other half of this position.
Yeah. KSS Colts this morning a little bit down, but overall also a very nice move higher that we see here. So from the lows to where we were on Friday, 46% move higher. My cost basis at 15, break even at 13.96, so still has ways to go, but loving this move. I mean, looking much better right now. We also here have left, as it seems, the $6 to $8 range. We're now back into the $8 to $10 range. That's what we're looking for. And after this, let's break out and move back towards my break even.
Time to go.
Yeah. Merc. I mean, this is where I'm still trying to fly a rescue mission. And last week, I sold the 76 puts for a rescue mission here. Didn't get assigned, rolled it over into this week. So right now, still having the 76 put. I have collected quite a lot in premium. So my initial cost base is 120. The break even now 111.41. So a little bit over 850 in premium that I've already collected per share. And it just keeps going. Of course, at some point, I'm interested in bringing down my cost basis. But right now, I'm just happy to keep collecting premium here.
Nice job. That works.
All right, UPS, our little buddy UPS here. Still trying to figure out what's happening with the economy, what's happened with the tariff war. Will we continue shipping all around the world? What about all of these TMO shipments or whatever it might be, right? And today, a little bit of a drop, but very explainable because today is ex-dividend date. So we are entitled to another dividend of $1.64.
Yeah, I'll take that. This has been a nice dividend pair. We've been in it a little longer than we both anticipated, but in the meantime, real strong, solid dividend there.
So with this dividend, my break even will come down to 115. I'll take this. So let's see what happens here over the next few weeks. But UPS can quickly rally back up there, and then I'll be very happy to sell calls. Finally, a trade that you have been in over the past few weeks, and you had tons of fun with MU, Micron Technology.
Yeah, I mean, this is one where with that tariff tantrum that we had on Liberation Day, uh, I was able to take advantage of that move lower with MU. My cost basis ended up being 73.75, and so I was selling calls at different levels. And just like IWM, I had half of my position called away at a lower level, and then I had the 79 calls that I sold multiple times. And with that rally that we saw last week, there was no more premium for me to be in the trade, at least based on my plan and rules. So I let those shares get called away. So I made some money on the stock, brought in a ton of premium with the calls that I sold, and now looking for another opportunity.
Yeah. All right. Well, other opportunities that we are looking for right now. This morning we have been looking at XLE. Haven't pulled the trigger yet, but XLE might be on our radar here. In addition to XLE, just looking in general also at CVX, Chevron. So just looking in the energy sector here a little bit, and this is where we found some good premium. And then finally, also CTRA looking interesting. This morning we did not pull the trigger. Let's just wait and see what the day brings. But all of these might be good opportunities.
Yeah, I think a couple of good maybes, and we'll see what the rest of the week brings.
All right. Now, we'll take a look at the markets to see if the rebound can continue. And there's the time of the day where we do have our dad jokes. Mark, what do you got for us?
So, Marcus, do you know the number one reason for dry skin?
No.
Towels.
Okay. All right. Also, question for you. What do you call a fake noodle?
I don't know, Marcus.
An impasta. With that said, let's go back to the markets and see what's happening.
Please, please.
Come on. All right. So 5-minute chart of the S&P. We opened lower right now. Had a great run up, hanging out around these levels right now, but still towards session highs for the Dow. Looking very similar. We're able to close the gap, pulling back a little bit right now. And the Nasdaq, a spitting image of the chart of the S&P. Russell, similar, not as much bouncing back, so hanging out here at 207. And the VIX, the volatility index that spiked overnight. I mean, here's where overnight it was up 20%, still up 7%, but still trading well below 20, kind of back in the normal range where we used to be for most of the year.
Yeah.
All right.
And Fed members this week. There's nothing on the economic calendar, but Fed members want to talk.
Fed members want to talk. Look at this calendar. I mean, this is where on the economic calendar, it just Fed members, Fed members, Fed members. I mean, all across. Bostich, Jefferson, Williams today, Logan Kashkari, Bostich again, Barkin tomorrow, Bostich, he is super active. Musalem, Kugler. So whether you're voting or non-voting member, this week, everybody has something to say. So it will be interesting to see what they have to say. This morning, I heard that one of the Fed members already said they're in favor of lowering interest rate once this year, but everybody will have a different opinion here this week.
Yeah, it all Fed speak. So we'll see.
Hope that you enjoyed the show. If you did, give us a like. There's probably a way to leave a like somewhere here where you're watching the show. Also, feel free to share it with somebody who might find this beneficial. I'll also link to a playlist here with a few videos that are recently released. Might want to check this out. And then we'll see you again next week.
Happy trading, everybody.